A few years ago, hardly anyone outside tech circles had heard the word crypto. Now, it's on the front page of every financial website, dominating headlines and becoming a key part of modern portfolios. From Bitcoin's meteoric rise to the explosion of new tokens and DeFi platforms, cryptocurrency has gone from fringe to mainstream in record time. But for beginners, it's still a maze of confusing terms, hype, and risk. In today's episode of Crypto Made Simple, we're breaking it all down, step by step. You'll learn how to choose the right crypto exchange, set up a secure wallet, make your first investment, and protect your assets like a pro. No fluff, no complex jargon, just clear, actionable guidance for anyone ready to start their crypto journey. Whether you're curious about blockchain technology, eager to diversify your portfolio, or just want to stop feeling left out at dinner conversations, this guide was made for you. So grab a seat, take notes, and get ready to learn the essentials of crypto investing. Be sure to like, subscribe, and tap the bell icon so you're always ahead of the curve. Let's dive in. 10. Understand what cryptocurrency is. To begin your journey into crypto investing, you first need to understand what cryptocurrency actually is. Cryptocurrency is digital money that operates independently of traditional banks and governments. It's built on a revolutionary technology called blockchain, which records every transaction in a secure, decentralized manner. Bitcoin was the first cryptocurrency, introduced in 2009, and it remains the most well-known. Since then, thousands of other digital currencies, such as Ethereum, Solana, and Cardano, have emerged with different functions and purposes. 9. Learn about blockchain and wallets. To safely hold cryptocurrency, you need to understand how the technology works beneath the surface. Blockchain is essentially a digital ledger that records transactions across thousands of computers globally. Every transaction is transparent and immutable, meaning it cannot be altered once recorded. This structure ensures security and trust without needing a central authority. But to interact with this ecosystem, you'll need something called a wallet. A wallet is your gateway to the blockchain. It stores your private keys, which grant access to your digital assets. There are hot wallets, which are connected to the internet and are more convenient but potentially less secure, and cold wallets, which store your crypto offline for maximum protection. If you're just starting out, a hot wallet on your phone or desktop may suffice, but as you invest more, consider a hardware wallet to protect your holdings. Remember, in crypto, you are your own bank, so learn to manage and secure your funds responsibly. 8. Choose a reliable exchange. Now that you understand wallets and blockchain, you'll need a place to actually buy and sell crypto. That's where exchanges come in. Think of them as online marketplaces where you can trade your traditional money for digital assets. There are two main types: centralized exchanges and decentralized exchanges. Centralized platforms are typically easier for beginners to use. They handle everything for you, including storage and trading. Examples include Coinbase, Binance, and Kraken. On the other hand, decentralized exchanges allow peer-to-peer trading directly through smart contracts, giving you more control but requiring more technical know-how. 7. Set a budget and only invest what you can afford to lose. This next step is vital. Never invest more than you can afford to lose. The crypto market is known for its extreme volatility. Prices can skyrocket or crash without warning. It's not uncommon to see a coin lose 30% of its value overnight or gain 50% in a single week. That kind of volatility is exciting, but also risky, especially for beginners. So before buying anything, set a budget. Start with an amount that wouldn't hurt your financial well-being if it vanished tomorrow. 6. Know the risks and avoid the hype. Crypto is not a get-rich-quick scheme, although many people treat it that way. One of the biggest mistakes beginners make is jumping into investments because of hype, without understanding the underlying project or the risks involved. Scams are rampant in the crypto world, from fake coins to rug pulls where developers suddenly vanish with investors' money. Then there are phishing schemes, fake wallets, and influencer shills promoting worthless tokens. 5. Master. Fundamental and technical analysis. Now that you've taken your first steps, It's time to sharpen your decision-making with some analysis skills. Fundamental analysis means digging into a project's real-world potential. What problem is it solving? How strong is the team? Is there a growing user base or developer community? Is it being adopted by businesses or integrated into real applications? Reading white papers, studying roadmaps, and exploring partnerships are part of this process. Then there's technical analysis, which focuses on price action. You don't need to become a trading wizard, but basic chart literacy can help you avoid bad entries or panic selling at the wrong time. Use both types of analysis together to build a solid understanding of when and why to invest in a particular cryptocurrency. 4. Develop a strategy, HODL, DC, or trade. Every investor needs a plan. There are several strategies to choose from depending on your goals and risk tolerance. HODLing, holding onto your crypto for years, is one of the simplest and most effective methods, especially for assets like Bitcoin and Ethereum. You buy, store securely, and wait for the long-term value to rise. It removes emotion from the equation and works well for those who believe in crypto's future. Another popular method is dollar-cost averaging, where you invest a fixed amount at regular intervals, such as weekly or monthly. This spreads your purchases over time, reducing the impact of market volatility. For those who want to be more hands-on, trading is an option, but it requires discipline, analysis skills, and time. 3. Secure your investments with best practices. As you start to accumulate assets, security becomes your top priority. In crypto, you are responsible for your funds. If you lose your wallet password or fall victim to a phishing attack, there's no bank to recover your funds. First, make sure you never share your wallet's private key or recovery phrase with anyone. These are the keys to your kingdom. If someone has them, they have full control of your assets. Write them down on paper, store them in multiple safe locations, and never upload them to the cloud. Use two-factor authentication on your exchange accounts, avoid suspicious links, and double-check URLs. Consider transferring your long-term holdings to a hardware wallet for added security. Stay up to date on common scams and protect your digital life like you would your physical wallet. Your crypto is only as safe as your security habits. 2. Stay informed and adapt. The crypto space moves fast. What's trending today might be irrelevant tomorrow. That's why staying informed is crucial. Subscribe to crypto news outlets, follow respected analysts, and participate in online communities. Platforms like Twitter, Reddit, and Discord can provide real-time insights, but remember to vet your sources. Don't just follow hype accounts. Seek out thoughtful commentary, real research, and long-term perspectives. These developments can offer new investment opportunities and help you understand where the space is heading. Stay flexible. As the technology matures and regulations evolve, so too should your strategy and understanding. Being adaptable in this fast-changing world is one of the best ways to stay ahead and protect your investments. 1. Take action and start small. Finally, the most important step is to begin. It's easy to fall into the trap of endless research without ever making a move. Start small. Open a wallet, create an exchange account, and buy a tiny amount of a major cryptocurrency like Bitcoin or Ethereum. Experience how it works. Send a transaction, try staking, or explore a decentralized app. The sooner you start, the sooner you'll learn. No amount of reading or watching videos can replace hands-on experience. Crypto investing isn't about timing the market perfectly. It's about participating, learning, and growing with the space. So take that first step. You don't have to be perfect. You just have to begin. Every pro in crypto once stared at the same screen you're looking at now, wondering where to start. The difference? They took action. If this video helped break down those first steps, don't forget to like, subscribe, and ring that bell. Because your journey is just beginning. Crypto isn't about hype. It's about knowledge, patience, and smart moves. Whether you're making your first trade, learning about wallets, or diving into blockchain basics, you're doing more than most. You're showing up, and that's what counts. So what's next for you? Are you researching coins, testing out exchanges, or just soaking it all in? Tell us in the comments. We read everyone. This channel is about turning confusion into clarity and beginners into confident investors. Want us to cover NFTs, gas fees, passive income from staking, or spotting good altcoins? Drop your suggestions. We're here to help you build a real foundation. Already taken the most important step, starting. See you in the next one. And until then, keep learning, keep asking questions, and never stop investing in yourself.